Truly delighted to introduce Mubadala. For those of you who haven't come across Mubadala before, I know most of you have, but Mubadala is the global investment company with a mandate to create sustainable financial returns for its shareholder, the government of Abu Dhabi. As a sovereign investor, its $243 billion portfolio spans 6 continents with interests in multiple sectors, geographies, and asset classes. So very powerful, very influential, very important in terms of the world that we're moving into. With offices in London, Moscow, New York, and Beijing, today, Mubadala is joining us from their Abu Dhabi headquarters. So I'm truly delighted to welcome my dear friend, Brian Lott, Mubadala's Chief Communications Officer, who will moderate our first panel discussion and introduce his fellow guests. For those of you who haven't met Brian before, I know many of you have, but for those of you who haven't met Brian, Brian worked in Washington, D.C., began his career in Washington, D.C., where he served as Chief of Staff, Spokesman and Campaign Manager for 2 members of Congress. He then worked for Burson Marsteller for over 10 years across a range of different sectors, strategically and geographically, and then joined Mubadala in 2009. And Brian today is one of the top global communication influencers and leaders. He's also on the board of the Arthur W. Page Society and on the Institute for Public Relations. There's so much I could say, but I will stop there and just say a very warm welcome to Brian and Mubadala. Brian, over to you, and thank you for being with us this morning, or this afternoon.
Sandra, thank you. Hello from Abu Dhabi. It's evening here, so it's dark already. Hopefully you've got some hours of daylight left. I'm really happy to be joining you for the ECHO Summit with my 2 colleagues, 2 Mubadala veterans here from Abu Dhabi. If you saw the news last week, Abu Dhabi will be the host city for COP28, which is exciting and helps frame today's conversation, which is about shaping the lives of future generations, something that we're committed to here in Abu Dhabi and across our portfolio. I'm really happy to be joined by Ahmed Saeed Al Calily. Ahmed is our Chief Strategy and Risk Officer. He was formerly the CEO of Mubadala and its energy platform. He's got a lot of expertise in this area. So we're going to have a conversation with him about a few issues around strategy and risk. And then Derek Rozycki, who is also a Mubadala veteran. He was formerly a CFO of one of our business platforms. He ran our treasury unit. He's got a lot of expertise now in our responsible investing sector of the business. He is someone who has taken this responsibility on for a unit that was just created in January. And so we're going to talk a bit about responsible investing and our perspective on responsible investing. But I thought we'd start, Sandra, with an intro about Mubadala itself and have Ahmed speak a little bit about our portfolio. Many of you know us. We're a big sovereign investor, obviously based here in Abu Dhabi, but we operate globally. And we're really diving deep into the world of ESG as climate becomes more important and as we think about the future of our citizens, but citizens around the world through that investment lens. Ahmed, thank you for joining us today. One of the questions I think the participants will likely have is just about us and not only how we see strategy and risk, but maybe a little bit to start with about our portfolio, who we are, and how our portfolio has evolved over the last 20 years of our participation in the investment world.
Well, thank you, Brian, and good morning to our colleagues attending the summit. It's always a pleasure to be here and speak about Mubadala and sort of give an overview of the work that we've been doing. So you've given a good introduction about Mubadala, but I think what is important to sort of maybe highlight is the unique nature of Mubadala. I mean, Mubadala is a sovereign wealth fund, but it's very much sort of acts and behaves like a private sector entity in terms of sort of the nimbleness, in terms of sort of how we approach things in a very pragmatic and sort of forward-leaning manner. It's an entity that has a mandate to create economic returns to the shareholder, but at the same time is is an entity that is multi-generational in its outlook. We take a long-term view on sectors, industries, companies. We're a company that is in the East, but again, we're very much in the middle between East and West in terms of our reach, our relationship, our economic interest. So it's a very unique entity globally from many perspectives. But I think the one thing that if you go back to Mubadala ever since its inception is that we've been very forward-leaning in our thinking, innovative, trying to sort of push the envelope in many of the things that we did, even going back 20 years ago, and sort of thinking about sort of the early days of Mubadala. When, for example, you give an example of Dolphin Energy back then, when fuel oils were being burnt, we came up with the concept of introducing clean gas, and we pushed for that. That was forward-leaning. That was something that was not sort of going, fast forward there to sort of the era when we created Masdar. Again, back then, I mean, that was something that was unheard of. A country that is heavily sort of focused on fossil fuel, coming up with a concept and pushing for renewable energy back then. That was unheard of. So again, that's part of our DNA, and we keep reflecting, keep thinking about the future, and it's always the future that we think about. And as we think about the future, we're thinking about sort of what are sort of the next phase of sort of development, what are the industries of the future, where is the world heading, and as we reflect on that, I think it has become clear that I think we need to take advantage of the opportunities. I mean, Mubadala of today, I mean, we're very much focused after the restructuring on capturing the opportunities in the tech sector, the great growth there. That's a very big focus for us. Thinking about sort of the industries that have strong secular tailwinds, the mega trends of the future, the aging population, the shifting sort of behavior of consumers, the importance of ESG. Again, all of these things that we keep reflecting on. ESG is a big focus for this conference, and again, we think of it as not only as a way to mitigate risk within our portfolio, but a definite value creation lever that if and it should be sort of developed to its full potential, will have massive sort of benefits to the companies, our portfolio companies, and of course to the rest of the world and to future generations. Again, Mubadala in its forward-leaning is definitely focused on the industries of the future, so to speak.
Ahmed, you mentioned Masdar, which is our renewable energy company founded in 2006, so 15 years ago, at a time when renewables were significantly more expensive than they are now. There was not a lot of R&D going into making that commercially viable. Now it's definitely commercially viable. There's seen, even in this region, just a massive uptake of solar and to a certain extent wind. Judging from our evolution from that small natural gas project in 2002 to creating different industries around renewables, aerospace, and now into more futuristic sectors like life sciences, for example, and healthcare. What are some of the challenges if we look to double our portfolio, which is our mandate for those of you who are watching? As Ahmed said, our portfolio now is around 243 billion. We've gone from a very Abu Dhabi-based headquarters investment company to one that's now distributed all over the world. Our mandate by our board is to double our size by 2030, but to do so, and Derek's going to talk about this in a second, in a very sustainable and thoughtful way. That's going to be different given some of the pressures that Sandra mentioned at the beginning of the call, the intense scrutiny on climate and the right footprint for investors. How do you sort of look at that from a strategic standpoint and the risks of either going too slowly or too quickly as we look to double our portfolio by 2030?
Well, if we take a step back, and we think about sort of the ESG and sort of the climate investors in general are looking to sort of make positive returns, economic returns. But for Mubadala, I think it goes beyond that. I think it's a matter of sort of capturing sort of the growth in a matter that sort of is also true to what we are. I mean, we've always been forward-leaning, as I mentioned. If you think about sort of the sectors of the future, the sectors that Mubadala has always invested in, I think we've always taken a step back and looked at sort of how can we sort of make an economic contribution, but also a sort of a positive contribution globally. I mean, you've mentioned Masdar. This is definitely something that, if you look back, I mean, back then it was extremely expensive to invest in many of these sort of renewable sectors. Take wind, for example, power in sort of photovoltaic. But nevertheless, I mean, we took that challenge on, and sort of we've leaned forward, put our sort of our energy behind making that a success. And I mean, I think, you know, the proof is in the pudding. You know, today Masdar is a global player in renewable, with over $20 billion in sort of in investments in renewable, 11 gigawatts. So again, a sort of a sizable portfolio for a company that was created out of virtually out of nothing, in a sort of in a desert, so to speak. So I think again, I look back and I say, you know, we've always sort of taken a step back, but also had our eye on the future, and what can we do to sort of really advance the agenda, the global agenda, but also in a way that also makes sense for us financially.
I want to talk about net zero in a second, because the government has announced a net zero policy by 2050. But I want to go back to one of the sectors and one of the advantages that Mubadala has. You mentioned the commercial down payment you have to make in the early years for a renewable company or renewable play like Masdar. The Global Sovereign Wealth Institute just recently said that Mubadala is one of the biggest, by far the biggest sovereign investor in renewables, which was great to see. But not every entity has the luxury of that long-term view that we have, right? We've got a patient shareholder that sees that opportunity, has a conviction around an industry. We just saw that play out over a company in a different sector, in semiconductors, around global foundries, around an innovation that's really at the heart of the supply chain today, but the future industries of tomorrow. Maybe give us a couple of minutes on global foundries, just as an example of how we think about these new
I think this is a very good example of sort of, again, you know, taking a long-term view. Over 11, 12 years ago, I think, you know, when we first invested and sort of created global foundries. I mean, back then, I mean, it was sort of, the industry was in I wouldn't say disarray, but there was definitely underinvestment in the semiconductor sector. You know, at the same time, where sort of the growth in computing was obvious, but again, that required sort of a shareholder or an investor with a sort of with enough capital, but foresight and ability to execute, to really take advantage of that. I mean, if you think of global foundries of today, I mean, it's an integrated company, but it didn't start that way, 12 years ago. But again, understanding where the industry is heading, and being patient, and having sort of a focus on execution, to bringing essentially three companies together and create value. Today Global Foundries, as many of you would know, has been sort of IPO'd on the NASDAQ with a valuation of in excess of $30 billion. I think that is definitely a great story and a proof point in terms of how we as Mubadala think about the future, and having sort of the discipline to execute on a long-term strategy.
And some of those years weren't so easy, right? Because it's a very CapEx intensive industry.
Of course.
And I don't want to make it sound like, everything was perfect, because it wasn't. There were tough years there where the cyclical nature of the semiconductor industry did not serve us. So you can see why it's a rare fund that gets into a sector like that, because it really requires that long-term play. Speaking of long-term, Derek, former head of corporate treasury and finance, former CFO for one of our platforms, now in charge of responsible investing for Mubadala. You're talking with and interacting with a lot of external stakeholders that are looking at us and looking at our portfolio and watching the shift that Ahmed described. Give us your thoughts on sort of where we are, you coming into this role, and the dialogue that we're having with more and more external stakeholders as they start to look at us in our future.
Sure. Well, it's been a great journey with Mubadala thus far, as Ahmed has outlined. And in so many ways, we have a prescient leadership that understands industry trends, looks very far forward into the future, and has great conviction about the direction of travel for these industries. And I think we're recognized for that across the financial markets, which has been fantastic. I think as we look to incorporate the institution and institutionalize ESG into our portfolio and leverage that within our organization, really building upon one of the core strengths of Mubadala historically, which has been our governance structures. We've been weaving this ESG story into our portfolio from the very beginning, as we were established as a development company. And as we've now grown, we're looking to push that further. So we have a lot of strong partnerships that are leaning in with us, finding to identify the types of opportunities that Ahmed has identified and are looking to partner with us. As we look to build ESG into our portfolio and institutionalize that, we're really doing it in three key ways, and to take advantage of all of the frameworks that have been developed over the last 18 to 24 months, the data that's coming into availability as the markets generally have really leaned into ESG more recently. And we're doing it by focusing on building culture, building fluency within our organization. And that really helps us to understand how to integrate ESG into each sector-specific aspect and role across the organization, be it in sectors or on our corporate operations. Because at the end of the day, the essence of ESG and what it means for each of our different sectors is very different. So just take financial services as an example. How to integrate ESG and identify the opportunities and the challenges in the financial services sector is very different between insurance and asset management and financial fintech. So we have to be careful about that, and we're building that fluency within our organization, particularly in the context of these new frameworks that have come under development more recently. We're also building tools and a broad framework across our organization. And that includes establishing a policy and publishing that in the middle of this year for responsible investing, helping to articulate how we incorporate ESG into our life cycle of our investments, ensuring that we are getting a consistent amount of information at all the different decision nodes, whether it's in the screening and investment phase or through the asset management life cycle all the way through to exit. And we're also ensuring that we're bringing common templates to help not create bureaucracy, but to drive efficiency within the organization, to help people understand where to focus and articulate things in a common and consistent way to help our decision makers, such as Ahmed at the investment committee level, understand the issues that are most tangible, that have dual materiality, that both create value and a positive ESG outcome. And then to incorporate that into decisions going forward. And then lastly, as we look to engage as a steward globally across the markets, build on this long history of strong governance, this long history of integrating environmental and social considerations and principles into our decision-making process. We are engaging with entities like the One Planet Sovereign Wealth Fund, Initiative, or the International Forum for Sovereign Wealth Funds, and the World Economic Forum to create stronger relationships across the global business communities and with our partners to leverage learnings from each other and to become more efficient and really to drive the path forward. Not to wait necessarily for regulators, that's going to be a very important part of the development of this sector, but we also want to drive it ourselves and be part of that process.
So we are not BlackRock. We are not the Norwegian pension fund. We're somewhere in between, right? And for years, we've watched institutions like BlackRock, and we've followed Larry Fink's thinking about ESG and the call to action for the investment community. But you've been in a position where we disclose certain things as a sovereign fund that many do not. Mm-hmm. Our annual financials were rated by the credit agencies. We don't really have to do this. So why are we doing this? Why have we decided it's important to follow the ESG path and be more verbal about it and more external thinking about it, and even getting our employees to talk about ESG? Yeah. Why is that important?
Yeah. So I think, as Ahmed mentioned earlier, it's fundamentally aligned with the nature of our organization as a sovereign wealth fund. We're focused on delivering value and a more sustainable future for the coming generations. And that, as the Business Council in the United States highlighted in 2018, it has to take more into consideration than just the bottom line for shareholders. It has to take into consideration the impact of decisions across all of the different impacts on all the different stakeholders. And so that's just fundamentally aligned with our DNA. It aligns with the objectives that have been outlined for us as an organization by our shareholder. And we continue to drive forward in that process today, just as we did in the early years of Mubadala, as we used to talk about, focusing on our double bottom line, where financial return was necessary but not sufficient to make our investments. We're continuing that trend as an investment company, doing it not just here in the UAE, but across the globe.
You mentioned our shareholder, Sandra. We heard at the beginning speak about the importance of COP26 and the climate discussion. Ahmed, our leadership just recently announced that the UAE will commit to carbon zero by 2050. Obviously, that has given that our board is made up of the leadership of Abu Dhabi, that's going to have a big impact on our portfolio and how we think about our future investments. What do you see in terms of how we're going to change our behavior over the next few decades as we look to support the government's effort to reach that goal?
I think it's important, just to mention that, I think it is extremely important and commendable for the UAE to sort of set that sort of target, and I think it's important to signal to companies within the UAE that this is really something that the government is prioritizing, and everybody needs to follow suit. So I think it's important to have that out there. Now, if we reflect on Mubadala, again, I mean, I would say that notwithstanding that we've been sort of investing in the sector, in the renewable sector, in sort of been focused on sort of reducing emissions from our assets and making sure that they are sort of adhering and are sort of progressing along this journey. So again, I would say that we have been, as a company, have started this journey, but I think it's important for us to reflect also on sort of what does that mean for our portfolio and sort of the companies within our portfolio. But again, I think it's extremely important. We're excited to be able to sort of support the government in sort of achieving that goal, and we will certainly make sure that sort of our assets and sort of our partners are engaging and are on the path to meet that sort of that target for the UAE.
Just to be clear for the participants watching, this is not an intention that is taken lightly. Our board chairman is the Crown Prince of Abu Dhabi, and our vice chairman is the deputy prime minister of the country. So when they lay out a goal, particularly from a board perspective, they'll expect us to walk the talk and make sure that we're doing our part as Mubadala to meet those commitments that the government has outlined. Derek, maybe talk about what that means for our portfolio and some of our portfolio companies, right? Because ESG is in the air. It's clearly not just the topic of today, but it's the topic of every boardroom around the world, focused by big conferences and commitments made at COP26. But it's obviously a priority for partners, for employees, for everyone concerned about the future of the planet. So from our perspective, what are the big, and for those watching, what are the big takeaways that are important for them to understand? What can they do to contribute to the whole effort to sort of push ESG forward and join us in this journey?
Sure. I think that the first and most important aspect is to embrace ESG as a concept and the role of business in society, and the responsibilities that we have to drive again a more sustainable future, not just to focus on the bottom line, but to understand that we have a responsibility that's broader than that. The second is that we need to have tactical plans. Net zero 2050, and there's various timelines that have been articulated by different entities. These are incredibly important statements of intent that set the long-term vision, set the long-term goal for organizations. They need to be accompanied by tactical plans that lay out real, tangible outcomes to the beat of the drum every month, every year. And so we're working with our assets, as we do across all financial and operational tasks. These ESG goals and objectives fold in right alongside those, and many of them we've been managing for many years now. Climate is again one of those. Understanding the footprint broadly across our portfolio is something we're looking at, assessing in time, helping our assets understand the importance of driving that process, understanding where their exposures are in relation to climate, and then looking for opportunities to mitigate their footprint in due course. And then the third component, I think, is really a clear understanding that no one entity can drive an outcome here on its own. We have to work together. We have to take a systems-oriented approach to find the solutions. So across academia, across government, across businesses and society at large, we need to work together to define those tactical plans to achieve the long-term goals that are set by net zero and other objectives, and to move from what has been a very strong dialogue into a plan to affect real change, to drive technology development that will support not just the developed world, but the developing and emerging markets as well. So it's got to be a comprehensive systems-oriented approach with real tactical outcomes and focus, and an understanding of the role we all need to play together to overcome this challenge.
Ahmed, maybe I'll have you have the last word before we throw it back to Sandra for some questions from the audience. But you sit on the investment committee. You meet every Tuesday as a group of our top 11 senior leadership who look at deals and deploy capital based on a lot of data. This is relatively new to us as a process, as Derek has outlined, in terms of having information that feeds into the IC, even though it's been our intention and it's been in our DNA. What are you expecting from the team to present to the rest of the investment committee in terms of making decisions on, okay, we're going to go forward with this partner on this investment, or we're going to wait on this because we don't have all the information we need to feel comfortable? What's that going to look like over the next couple of years?
Well, I think and what Derek is doing is extremely important to build the sort of the fluency in the organization, but also to build in sort of the checkpoints to make sure that sort of things that deals that we look at are meeting certain criteria, are ticking certain boxes. and that is becoming more and more sort of structured as an approach. And again, I say in the past, I mean, we looked at that. I mean, there's no doubt that sort of we've considered sort of the governance matters, the environmental matters of deals coming to the IC, and we've been very responsible. But again, I think we need to move beyond that, and we have moved beyond that. And sort of what Derek is doing is making sure that sort of the organization understands there's a laser focus on making sure that sort of deals coming. Partners that we partner with are meeting certain criteria, and when that comes to the IC, there's a process. I mean, there's a checklist. If they have to go through it, and if it does not meet the guidelines that follow, so we will drop these deals. So again, I think it's about institutionalizing it and making sure that we're sort of walking the walk and talking the talk, and making sure that what we say is in fact in place.
And a policy that took a good amount of time to do it right? I mean, it's not something that's just a couple of paragraphs of good intention. You really have to have a real policy that then you publish and share with external stakeholders as well.
That's right. Then you need to stick with it.
Yeah, great. Sandra, that's the Mubadala story. That's where we are both from an internal structural perspective on our ESG and responsible investing journey. Happy to take any questions that you might have or that the audience might have in the time that we have left.
Perfect. Thank you so much, Brian, Derek, and your team at Mubadala. This has been really interesting and so inspiring. There are questions coming through. If I can perhaps call Hele. Hele, can you unmute yourself and ask the question you've just posed, please?
I can indeed. Thank you so much. I have to admit, I'm very, very impressed. And also wonder, as you also have said, we had so many commitment coming out of COP26 now and looking forward to the next COPs. But in your mind, what are the biggest, perhaps three biggest or one biggest risk and opportunity if all of those commitments do not hold through? What is it that you believe that you can really bring to ensure that we are moving along, not just kicking the can down the road?
Yeah, so it's not just happy talk. Ahmed, maybe over to you for that one.
Well, I think the only thing that I can say is that we are definitely committed to making a difference, and we're really committed to sort of making sure that our portfolio and sort of the actions that we take at corporate, at Mubadala, and our portfolio companies are adhering and are sort of aligned sort of with the direction. I mean, there's definitely risks along the way, as you've seen. I mean, maybe certain countries may not enforce sort of the recommendations. There's reluctance on certain things, but nevertheless, I mean, as a company, I mean, we will definitely do our part to make sure that we're doing the right thing for our shareholder, for future generations, and also as a way, as I mentioned in the past, it's a way for us to mitigate future risks. So again, we will do our part, no doubt.
And Derek, maybe talk for a second about the power of this community, not just the One Planet Sovereign Wealth Fund, but all of the sovereign wealth funds that we interact with. We didn't have the same joined up approaches in 2017 when the Paris Climate Accord came out. So there's been an evolution in the amount of group action, to Ahmed's point, that collective realization that we have to do something together. Oh. Maybe just a little bit about how often we're talking to other funds in a way that we might not have in the past.
Yeah, I guess two things in relation to that first, and then a follow-on comment from what Ahmed mentioned. We are constantly speaking with our peers about how we can everything from the most tactical to the most strategic aspects, including how do we get more data? What would we do with the data from across our portfolio, whether it's investing in funds or in direct investments? How can we increase the data intensity over time? So the breadth and the depth and the accuracy of that data. So very, very tactical things to, again, inform the decision makers, ensure that we're really driving that into the process, not just making judgmental decisions or judgment-oriented decisions, but also quantitative decisions. And so we have that constant dialogue across time in a way that I haven't really been exposed to in the past. 16 years I've been with the company in various roles, so it's very exciting in that regard. The other thing that I would follow on to Ahmed's comment about is that's exciting to see is that as we review each of the deals and work with our business development and asset management partners across the organization, whether it's on the business development side or on the asset management side, the organization over the last over 2021 has clearly been building momentum behind looking at the opportunity associated with ESG also. So we're seeing more new deals that have an ESG positive twist, more assets coming with new market opportunities and evolution around their business models, weaving ESG tailwinds into their businesses. And this is really, really exciting. So, and it really goes to Ahmed's point that we as an organization are leaning into this process. We're also having the difficult discussions with assets in the same way we have in the past. But I guess what I would say is that the market is more receptive to those dialogues now. And so as we identify areas where we see either an opportunity or a risk that needs to be managed, our proactive engagement is being embraced by companies, by other shareholders and capital providers within these organizations, and everybody is leaning in. So I'm optimistic about our ability to meet the objectives, to affect real change, and I'm a tactically oriented person. When I look across our nearly $250 billion portfolio, I see real change on a transaction and deal-by-deal basis. And I believe that as we aggregate those up, it affects real change across our portfolio that aligns with strong positive ESG outcomes for our portfolio and the achievement of strong risk-adjusted return. And I see this as a virtual cycle. And it's really starting to gain momentum, which is incredibly exciting.
Yeah, Helle, thanks for that question. There was an op-ed today in either the FT or the New York Times just talking about the multi-trillion-dollar market opportunity that comes out of COP26 if people are ready and mobilized to take advantage of it, which ideally gets us to the climate temperature point we need to get to.
Brian, Derek, Mr. Al Calily, thank you so much. There are some really interesting questions on the site. Brian, if that's okay with you, we'll forward those to you because I know that the individuals would love to have your response on that. We have come to the end of our time, but really appreciate hearing about all the many things you're doing. It is truly impressive and so important, I think, for us all and for the planet, and just delighted that you're there guiding the change that we need to see happen. And I think this issue of pace, long-term view is so fundamental to the success of this as well. So thank you so much for sharing your perspectives, for being with us today, and for sponsoring our whole summit this afternoon. So thank you. Brian, Derek, Mr. Al Calily, thank you so much for joining us, and we'll forward the exchanges with you and look forward to perhaps your responses offline if that's all right.
Absolutely, it sounds great. Great to be with you. Thank you, Sandra, and enjoy the rest of the day.
Thank you all.
Thank you.